I'm joined actually in studio at the moment by Jason Cartwright from Randstad and also Simon Boulton from Aequalis. Gentlemen, well below actually forecast. Initial reactions?
I think it's not unexpected. Certainly surveys that we undertook showed that about 70% of our clients were looking to hire before the end of the year. So hiring activity is still high and I think really looks sustainable with figures.
Jason, what were you expecting? Consensus seemed to be around 5.2% on the back of a 25,000 increase. We've done better.
Yeah, we have done better. I think those numbers are slightly on the higher side of what was expected. I think most analysts and commentators were expecting somewhere in the range of 20,000 to 30,000 new jobs. Most were calling somewhere in the middle, about 25,000 new jobs. So that's on the high side, I would say, of expectations.
Just reading here, we've also participation numbers have come in at 65.4%. Now, we did see a participation rate at 65.5%. So less people looking for work. Is that naturally then going to feed through to a lower unemployment number as we've seen?
Yeah, we would expect to see that flow through to a lower employment number, yeah.
And look, what are you hearing, I suppose, from employers? I might start with you, Simon, in terms of, the surveys and so forth that you're conducting.
Yeah, we're finding that confidence in our employers is very high. I think there was a significant spike through months of the year. There has been some hesitation following that, but now I think with the figures, the stats and the sort of performances that we're seeing in reporting season have really given now that sustainable jobs growth that we should see over the next 3 quarters.
Okay, we're just going to bring David Taylor in now from CMC Markets just to get the initial reaction from the market. David, what are we seeing in terms of the fallout from these numbers?
Oh, hi, James. Well, look, the response has been quite positive, actually. They don't always, markets don't respond always as acutely as they have in the last couple of minutes, but certainly we saw the Aussie dollar rising about 50 pips. It was trading around about 91.7-ish US cents and it's moved up above 92 to about 92.2 US cents. So clearly the investors are of the view that a rate rise may come sooner rather than later, and that's putting upwards pressure on the unemployment, upwards pressure on the interest rate factor. Coming up maybe as early as February next year, and that's putting upwards pressure on the Aussie dollar. Also, SPI and the XJO, the benchmark S&P ASX 200 index rose as well, around about 10 points on the back of that. So it's clear that the Australian domestic economy is moving along quite well. And I haven't got the exact figures, but I'm the impression just from talking to some dealers before I went to air that the full-time employment rate also rose quite significantly. So it's very encouraging for the market.
Yeah, that full-time employment rate was up 53,000. So very, very strong numbers. Look, it's a continuation, isn't it, of a strengthening of this labour market that we're seeing at the moment, Jason?
Yeah, the Australian economy is proving quite resilient and quite strong, as we can see. And I think Australian employers are overwhelmingly confident at the moment. They have returned to the market in droves throughout the year, and all of the survey data that we're seeing is consistent. That Australian employers will remain confident through till the end of the year, and will also continue hiring throughout till the end of the year.
Look, it's always a positive, Simon. I suppose jobs is a good thing, but are there negatives in terms of, I suppose, you start talking about potentially a looming skills shortage? Some people are suggesting.
Certainly, there's this very fine balance of skill shortage and unemployment. And I think that we're seeing that tipping point reach. I mean, clients of ours are already competing, particularly around that sort of mid-level, executive level. The very senior top end of town, I think, hasn't necessarily increased, but certainly in that middle to more junior end, competition's already running hot. And the skill shortage, I don't think, is far away.
Jason, you'd agree?
Yeah, absolutely consistent. We're seeing it return in a recent Randstad World of Work report. 34% of Australian employers were saying that a skills shortage actually never left their sector in the last 18 months. And in addition to that, 32% of Australian employers were saying that they expect a skills shortage to return before the end of the year. So it's there. I'd say that would also be consistent with recent Australian industry group AIG research, which has forecast quite acute skill shortages in some of the skilled trades, particularly in the mining states of Queensland and Western Australia, and in the mining and resources employers. So they're saying it's already there at that level of the market.
David Taylor, going back to you now for a second, obviously we had the Reserve Bank leave interest rates on hold earlier this week. How closely, in terms of the next meeting, do you think they'll be looking at these type of numbers?
Well, look, at the end of the day, it does come down to inflation. The Reserve Bank made it clear in their last paragraph of their statement on Tuesday that inflation was in the target band of between 2 and 3%. You've also got economic growth close to trend and interest rates at their average levels over the past decade. So at this point, interest rates remaining on hold for the time being is perfectly appropriate setting. And the question is, when will they continue to tighten? Because that's clearly what the next move will be. So it is dependent on how much labour costs add to that inflation rate. We know that the terms of trade via its incomes and demand pull inflation, that certainly that is a potential lift for inflation, and wage costs we also know may add to inflation too. But in order to find out just how much the wage costs are influencing inflation, we'll obviously need to get that read. So look, in the short term, I would say there's more of a chance that rates will stay on hold again for the next couple of months. But when we do get that next inflation read, if it does surprise to the upside, there's no doubt the Reserve Bank won't hesitate to move again to the on lifting rates.
And David, as you were saying before, we've just seen the Aussie dollar now reaching a 1 month high on the back of these stronger than expected employment numbers. In terms of the economy, the market, who's going to benefit from, I suppose, a higher Aussie dollar, and who potentially could be a little bit worse off?
Well, naturally, when you do get a higher Aussie dollar, it fundamentally keeps a lid on inflation, because imported inflation is obviously a large part of the basket. But generally speaking, consumers find it easier to buy goods and services, because the higher Aussie dollar means that imports do come through, we've got more purchasing power, but naturally it's difficult for exporters as well. So with obviously the pressure on exporters to gain a competitive edge on the international stage, when you do have a rising Aussie dollar, and companies have flagged that recently. In fact, Foster's recently flagged the fact that a higher Aussie dollar was impacting their wine business, and it has always been doing that. So naturally you get big heavyweights where it does hurt their bottom line, but essentially these automatic stabilisers do tend to help the market regardless. But a higher Aussie dollar, yes, basically does hurt exporters in the short term.
Yeah, I've just been made aware we're now at a 4-month high for the Australian dollar. Look, David Taylor from CMC Markets, thanks for your time.
My pleasure. Thanks, James.
Gentlemen, I might bring it back to you quickly. 5.1%. Could we see it sub 5%? Is that a possibility, do you think?
Yeah, I mean, I think, yes. I think, look, Australian Treasury, as we know, had forecast the unemployment rate to dip below 5% sometime into next year. The figures month after month in the Australian job market at the moment would indicate that perhaps we'll dip below that 5% before year end.
And Simon, you'd agree with that as well?
Yeah, I would. And I think we've also got to look at our competitors and other nations and what their unemployment rates are running at. You know, in the UK it's been 7.8%, in the US up to 9.8%, and in the US actually hit 10%. And it's not so long ago that there was a forecast of potentially a 10% unemployment rate here in Australia. But I think as that employment, as this competition for talent tightens, naturally wages will rise. Talent becomes rarer, the price goes up. So that can have a sort of, I guess, a inflationary sort of effect as well. Well,
I wanted to ask, is that the other looming concern? And look, it feels bad to be talking about negatives with more people in employment, but wages pressures, we haven't seen it, from what we understand, up until now, but does it seriously become an issue? Yeah,
I would say yes. I think overall, again, the data is consistent on this. From the most recent NAB survey on labour costs has ticked up, and all of our survey data is consistent that overwhelmingly Australian employees are expecting a salary increase. It's particularly evident in the banking and financial services sector. 86% of employee respondents are expecting an increase in the next 12 months. And then across all sectors, it was 52%. So, yeah, it's there.
Simon?
Yeah, I think the point you made about financial services is a good one. That's probably where we're seeing the really tightening of salaries, and people are becoming more expensive. So that talent shortage is already, I think, starting to pinch. And is I suppose the concern, has that dwindled a bit in terms of the height of the GFC about losing your job and not leaving jobs? Is that starting to dissipate? Are we going to start seeing people being more active in terms of moving jobs? I think we've already seen that. I think that there's been people now leaving jobs to take new jobs. That's probably increased significantly over the course of this year. And that's all part of, I think, this shortage that's going to happen. People are leaving. People are looking for more jobs. As they look for more jobs, they want a higher salary. So again, it all does have a an inflationary effect as well.
All right, gentlemen, Simon Boulton from Aequalis, thanks very much. Aequalis, I should say. Thanks for your time. And, of course, Jason Cartwright, Randstad. Do appreciate it.
Thank you.
Thank you.